A down day on Wall Street Friday amid fears the U.S.-China trade war may be ratcheting up again. Sources confirmed to Reuters that the White House is mulling the idea of booting Chinese companies from U.S. stock exchanges. Of all the three indices, the Nasdaq was hardest hit, down 1.1%. That's where U.S.-listed shares of China's Baidu and JD.com are traded, among other Chinese companies. Some economic data on Friday also left a lot to be desired. Personal spending barely rose in August as the nation's savings rate surged. But don't vote against the U.S. consumer, warns Paul Kleinschmidt. He's a portfolio manager at Tocqueville Asset Management.
But at least what we're seeing is like I said, we're seeing low unemployment rate, we're seeing increased labor force participation, we're beginning to see more than green shoots when it comes to wage inflation at the lower end. So I think if those things hold up and business investment in the face of really what's an industrial recession is important, but I suspect that's largely due to deferred capital investment because people are very concerned about the trade war. But that's important, but that's not everything. The main thing to focus on is, do people have jobs? Are those jobs putting a little bit more money in their pocket? And how are they feeling about the money that they have in their pocket?
In separate reports released Friday, business investment remained weak, but on the upside, the Federal Reserve's favored measure of inflation saw the biggest year-over-year jump since January. The so-called core PCE, however, remained stuck in August below the Fed's 2% target. Shares of Wells Fargo saw a nice pop Friday. The tarnished bank named industry veteran Charles Scharf as its new CEO. Wells Fargo has struggled for years after a scandal where bankers opened up customer accounts without permission. The stock rallied 4%.